The three structural buy levels. We had this structural buyer here, with this structural buyer here, and with this structural buyer here. We had these three levels already marked on your screens. What happened? Isn't it exciting that the buy came from that structural buy level? Isn't it incredible that if you bought that structural buy level, buying a structural buy level, that you've just seen the price going from 57 to 87 for $1,500 of upside profits? Is that not something that you want to know about? Is that not something you want to be looking at your charts and going, oh my God, that is absolutely unbelievable? Personally, I think it is something you want to be able to look at and go, that is absolutely spot on. That is absolutely fantastic. That is absolutely fabulous. But that's up to you. If you want to do the work and make $1,500 profit on that trade, then you've got to do the work and make $1,500 profit on that trade. What was happening on the value? What was happening on the sentiment line? Could you have bought it from that price, Melvin? Was it visible? Well, you're taking a bit of a gamble because you're coming into the PCE numbers. Absolutely. But was it visible about a value divergence? Take a look and see whether you think it was. Here's the sentiment rotations. This is aggressive. This is obviously the growth against divvies, right? Growth against divvies pre-market. Do we agree that there is a value divergence? Well, the last time we traded here, the orange line was here, yes. And now the orange line is here. Have I got value divergence to buy into this, yes or no? Sure. But you don't have to rely on the down phase. You can actually get the buy-in after it starts going up. You could actually have got the buy-in after it goes up. Take a look and see. I'll zoom in for you, especially, look. So this is a 1 minute chart. You can see that 2 minutes after the orange line goes up, NASDAQ YM, of course, after the orange line goes up, do you see an opportunity to buy in here? Yes or no? You tell me. Take ownership, yes or no? Absolutely. So, I assume you all got it then. I assume you all got it. I assume you all decided to take a punt on it. You found a POC level at 1,300 hours and you thought to yourself, you know what? I really like that POC at 1,300 hours. I like that volume node that I'm seeing down there. It was also a delta extreme. Yes, it was. It was also a delta extreme. And it also had bid volume. It also had a withdrawal of liquidity on the offer. Oh, yes, it did. A withdrawal of liquidity on the offer was there at exactly the same time. Take a look and see if you can agree with me. Again. Here's 1,300 hours. Here's the S&P. The market's situation in terms of order book has gone bullish, yes. The price has already gone bullish. The order book's gone bullish. So we have bids available to trade into. We then got these delta extreme reads here and here. Yes, delta extremes. So we've now got delta extremes in those prices. You'll see into the bottom edge, there is an increase in volume in there. It's all lopsided. You can see that there's a very, very strong imbalance in that situation just in there. All lopsided, 40, 50, 60 contracts plus another 40 in there. A buy reversal back there would be perfect. There's Voltics, there's a POC here. If you wanted to buy there, you still made a nice buy. Personally, want to try and get in as early as possible in the deal. And buying at 56.5, 56 and 57s, to me seemed to be the right price. Which means at 56, 57, of course, the price you're actually getting on this trade is very near the bottom edge, guys. 56, 57s is that price right there. That's where you got your buy trade. Not a candle reversal at 58.25. 56, 57. Justin, did you get below 57.5 for your fill? Or did you wait for the POC at 57.5? It's up to you. That's not a bad thing. So long as you didn't pay over 58s, I'll give you a pass mark on that one. If you paid over 58s, it feels very, I know it may still made money, but you should have been able to get a better price. So challenge yourself to get that better price. You should not have paid 58 for that trade. You should have paid 57.5, 57.75. Worst price, 57.75. Now, you may have slipped one tick on that, which meant you got filled at 58s. That's absolutely fine if that's what happened, but you should not have paid a tick over 58s. Should not have paid a tick over 58s. And obviously what happens? Well, where did the seller come in? Well, isn't it exciting that the seller came in at what price? A level that you already knew about, because you do mark, like good traders, you marked a structural seller there, yes or no? Like good traders, you marked a structural seller at that price. Why is that a structural seller? Well, that's a structural seller because that was the previous low, and that's the new low, so that must be the structural seller, right? So that's, like all good traders, you mark your structural seller. So that's a great place to take profits, especially when the value is declining. You're back to looking for an opportunity, right? And obviously the opportunity starts to come in on the numbers. So you're not doing the number itself. The opportunity came in when we started to see into the numbers proper. Now let's take it down a time frame. Let's take it down a time frame. Does everybody see that little spring trade opportunity right there? Bearing in mind that the big level that we need to take out is the 57s, right? The 70s, sorry. So there's your next spring trade opportunity there. Now you're not buying it on the way down, guys. You're not buying it on the way down, but do I have value to buy it? Yeah, probably. In the grand scheme of things, we've got value to buy into this. You know, so long as we don't buy it sort of 62.25, 62.5 and all that kind of nonsense, right? So what we're trying to do is buy at lower prices into the 58s. So does anybody see where the trade opportunity is at 1:30? Well, you should, because obviously you've got access to things like order flow footprint type charts. You should be able to locate exactly the price where we go bid on the book, we go bid on the book, and we go bid on the prices. We get above a POC. So what price did we get? Now we've got to be more careful with this one. We're into a very noisy, volatile trade here, so we've got to be fast, we've got to be furious. Let's take a look. As the price trades down on the first response, there's the previous lows right there, right? So there's the previous lows right there. The price takes out the previous lows. Now you could have a Heisman buy at 59.25. Obviously the POC at that stage was away up here, so that's quite a distance away. You're probably going to end up buying something like 61.25 for that trade. That's a bit of, it's a little bit far from me. I don't like paying that type of money for these types of deals because it is volatile. So we could easily have a 15, 20 tick stop and still get stopped out and still be on the right trade. So I want to try and find something a little bit closer to home. So there was a big Baltic came in at the same price here and here. See that? So that's confluence, guys. Think about it. That's confluence. Baltic at the same price, but over different periods of time. What is Baltic? Baltic is aggregation without having to see volume, yes? Baltic is activity aggregation. When you think about that, if you've now seen activity aggregation at the same price, could I not buy against that? Could I not buy one tick above that price, guys? Could I not buy at 60, for example, and get a nice aggregation reversal? I'm not buying at 59.75. I'm not buying at 59.5. I'm not buying at 59s. I need to get above that 59 area. I need to pay 60 for this trade. Otherwise, I'm buying into that potential problem. I don't want to buy into problems. I want to buy away from problems, right? I want to buy away from problems. There is your buy trade at 60. Does everybody understand that? Does that make sense, Mike? So you're buying at 60, guys. You're paying 60 for that position right there. You're not having to rely on it stopping on the way down here. You're just waiting for it to turn back up again. And obviously the takeaway from that buy trade has been a brutal buy opportunity. I mean, it's made a lot of money through that phase. A lot of money. Voltics are activity aggregation. Make sense? Voltics are activity aggregation.